Hello my students. How are you all? Welcome to the economics class. I hope you are enjoying your study. Let us start our today's lecture. The objectives of our today's lesson are: to know and understand about income, to know and write about the personal income, to know and write about disposable personal income, to understand and explain the concept of national income. Chapter 4 is about income, savings, and investments. In this chapter we will study about the basic concepts or terminologies of economics. Basics terms or concepts describe the subject matter. We can also call these basic terms as vocabulary of economics. Do you know what is income or remuneration? Income is money, or some equivalent value, that an individual or business receives, usually in exchange for providing a good or service or through investing capital. For individuals, income is most often received in the form of wages or salary. Income can also be called remuneration. Business income can refer to a company's remaining revenues after paying all expenses and taxes. So what do we mean by revenue? It means the profit or earning which we make from any activity. In this case, income is referred to as earnings. Most forms of income are subject to taxation. Now we will study that what is tax. The examples of income are: a salary or wage that is paid in return for work. Business profits. The net income of a business. The salary which an employee gets from his company. The interest received from a bank on deposits. The rent received from a house. Now students, we are going to start a very important topic, that is personal income. So what is personal income? Personal income refers to total income collectively received by all individuals or households in a country. Personal income is the amount of money collectively received by the inhabitants of a country. Sources of personal income include money earned from employment, rents received from property ownership, and profit sharing from businesses. Personal income is generally subject to taxation. Now what is a tax? Let us discuss few points about tax. Taxes are charged by the government entity. Tax is a source of income for the government. After payment of taxes, the citizens of that country are provided with the facilities of education, medical facilities, and other benefits are given to the public. Roads, hospitals, and schools are constructed by that money. I hope now it is clear that why it is must to pay tax. That money of tax is used for our benefits. Let us watch an animated video to clear the concept of tax. When we pay tax from our income, the amount which is left with us for consumption is called disposable personal income. Disposable personal income refers to the amount of money a population has left after taxes have been paid. It differs from personal income in that it takes taxes into account. The formula of disposable personal income is personal income minus taxes.
Disposable income is the money a person has left over after all taxes have been paid. Other deductions that may affect the amount of disposable income are employment deductions for things like health insurance, For most people who receive a paycheck, disposable income is the net amount they receive in their check. Disposable income is an important term in economics because it is a key indicator used to measure the health of the economy. Disposable income is what economists use to monitor how much households are spending and saving. It is from this pool that analysts and economists can understand the ability of consumers to make purchases, pay for living expenses, and save for the future. Disposable income is often confused with discretionary income. Discretionary income is disposable income minus living expenses, such as mortgage payments, utility bills, clothing, groceries, transportation expenses, and other bills needed to maintain one's lifestyle. Discretionary is what people use to pay for vacations, entertainment, and other forms of recreation and leisure. Harry earns $100,000 per year. If the tax rate is 35%, then Harry's disposable income is $65,000. $100,000 minus $35,000 in taxes. This $65,000 is the money Harry uses to maintain his lifestyle. Assume Harry's housing, utilities, food, and clothing cost $40,000 a year. Harry's discretionary income for the year is $25,000. $65,000 minus $40,000.
Now a very important term we are going to study, that is the income of the whole economy. Income of all citizens of the country. That is national income. National income means the value of goods and services produced by a country during a financial year. Thus, it is the net result of all economic activities of any country during a period of 1 year and is valued in terms of money. National income is total amount of goods and services produced within the country during the given period, say 1 year. It is the total of factor income from wages, interest, rent, profit, received by factors of production, labor, capital, land, and entrepreneurship of a nation. What are the factors of production, students? Yes. Land, labor, capital, and organization or entrepreneurship. Now we will discuss that what are the basic concepts of national income. Following are the basic concepts of national income. Gross National Product, GNP. Net National Product, NNP. Gross Domestic Product, GDP. Personal Income, PI. Disposable Personal Income, DPI. Now I would like you to answer few questions. Are you ready for the question-answer session? Define income in your own words. Okay, now. What do we mean by tax? Next question is: can you elaborate the difference between personal income and disposable personal income? Okay, my dear students. Now we will discuss these concepts in the next lesson. All of you are required to solve the worksheet and submit on time. Thank you. See you in the next lecture. Stay blessed. Okay, my dear students. Now we will discuss these concepts in the next lesson. All of you are required to solve the worksheet and submit on time. Thank you. See you in the next lecture. Stay blessed.